Hello students, welcome to EduRev. Have you ever wondered what quietly keeps trade, production, and daily business running smoothly behind the scenes? In this short lesson, we will explore the world of business services, what they are, why they matter, and how banking, e-banking, insurance, warehousing, postal, and telecom services make modern commerce possible. Think of business services as the invisible helpers that connect producers, sellers, and customers so goods and money can move safely and on time. Auxiliaries to trade or business services include banks, communication, transport, insurance, and warehouses. And together, they form the service sector that businesses cannot do without. Let's begin by understanding the basic nature of services through 5 simple ideas, often called the 5 I's. First is intangibility. A service cannot be touched or held, and its quality is often judged only after it is used. Second is inconsistency. Service quality may vary from time to time because people and situations change. Third is inseparability. Many services are produced and consumed at the same time and cannot be separated from the provider. Fourth is inventory. Unlike goods, services cannot be stocked for later sale because production and consumption happen together. Fifth is involvement. Both the provider and the customer often take part in creating and shaping the service experience. These features help explain how services differ from goods. Goods are tangible, storable, and transferable, while services are experiential, perishable, and often personalized. Now let's look at the types of services you'll meet in the real world. Business services, social services, and personal services. Business services support enterprise activities and include banking, insurance, warehousing, and communication. Social services are provided for community welfare, like free education or healthcare offered by NGOs. Personal services are individual-facing, such as travel, hospitality, and restaurants, where each customer's experience can differ. Banking is one of the most important business services because banks accept deposits, provide loans, and help move money across places. There are different kinds of banks. Commercial banks that handle deposits and loans, cooperative banks that support rural credit, specialized banks that serve specific sectors, and the central bank that regulates the system. Commercial banks perform core functions such as accepting deposits in current, savings, and fixed accounts, and encouraging saving with interest. They also lend funds through overdrafts, cash credit, term loans, and bill discounting to support trade and industry. Check facilities let customers withdraw or transfer money using bearer or crossed checks with clear rules for payment. Banks remit funds through drafts, pay orders, or transfers, so money can move reliably between locations. Beyond these basics, banks provide allied services like safe deposit lockers, bill payments, insurance premium collection, and even share transaction support. A bank draft is a guaranteed instrument used to send money out of town, while a pay order or banker's check is similar but usually for local payments. Technology has transformed banking into e-banking, which uses computers and the internet to make transactions faster and more convenient. E-banking includes electronic fund transfers like NEFT and RTGS, ATMs for 24/7 cash access, debit and credit cards for payments, and online banking for direct instructions from your device. For customers, e-banking brings 24/7 access, transaction records that improve transparency and security, and greater convenience for payments. For banks, it reduces branch workload, enables a wider network, automates accounting, and offers a competitive edge through faster services. Insurance is another key service that protects people and businesses by pooling small premiums to cover large, uncertain losses. Insurance functions include providing certainty, protecting families, sharing risk, preventing financial damage, supplying capital, and supporting economic stability. Several core principles guide insurance contracts: utmost good faith, insurable interest, indemnity, proximate cause, subrogation, contribution, and the duty to mitigate loss. These principles ensure honesty, limit compensation to actual loss, and distribute responsibility fairly when multiple insurers are involved. Common types of insurance include life insurance, which pays on death or after a set period, fire insurance for fire losses, and marine insurance for sea perils. Understanding the differences helps businesses and individuals choose the right cover for risk protection. Businesses also rely on communication and transport services to reach markets and move goods efficiently. Communication services include postal and telecommunication systems that help send messages, reports, and payments across distances. Transport covers the physical movement of goods by road, rail, air, or sea, so products arrive where they are needed. Warehousing gives businesses a safe place to store raw materials and finished goods until they are required for sale or production. Warehouses can be public, private, bonded, or specialized, each serving different storage and regulatory needs. Postal services combine mail transmission with several financial and allied services like postal banking, saving schemes, money orders, and parcel delivery. Mail services offer options like ordinary posting, postal certificates for proof, registered post for delivery assurance, and parcel services priced by weight. Allied postal services now include speed post for fast delivery, e-bill collection, media post for advertising, greetings post, and courier options for time-sensitive parcels. Telecom services are the backbone of modern business communication and range from cellular networks and fixed lines to cable, VSAT satellite links, and DTH media services. Each telecom type supports different business needs, whether mobile messages, long-distance voice and data, or satellite connectivity for remote locations. So, what is the key idea to remember from this tour of business services? Services are the infrastructure of commerce. They move money, share risk, store goods, and connect people. And modern technology is making them faster and more reliable. For commerce students, this means understanding services helps you make better decisions about finance, risk, operations, and customer experience. Quick recap. Business services include banking, insurance, warehousing, communication, and transport. Services are intangible and involve the customer. E-banking and telecoms increase efficiency. And insurance spreads risk across many. Thank you for listening and exploring these essentials with me. If you want to dive deeper, join the full lessons and practice quizzes on EduRev, where each topic is broken down with examples and visuals. Keep curious.